Right now, the investment world is falling over itself to give clean vehicle companies, automotive startups, and green infrastructure companies as much money as physically possible. In fact, to say hydrogen fuel cell and electric vehicle technology is hot right now would be an understatement. And no, I'm not just talking about LG Energy battery packs catching fire. If the company has at least one person with a pulse and a promise of bringing a new revolutionary vehicle to market, someone, somewhere, will throw money at it. Although a well-designed AI could probably garner investment dollars too. Now that would be a fun project for Tesla's dojo to work on. Simply put, every investor with an interest in the clean vehicle market has seen how well Tesla has performed. They've seen how much money Tesla has made for its early investors and fans. And they want in at the ground floor of new startups, just in case their investment dollars can grow the way that Tesla has in the 10 years it's been on the stock market. I mean, come on, if you had invested $1,000 back when Tesla first listed in March 2011, you would have enough money today to buy a Tesla Model S Plaid. Yeah, it's days like this that being a journalist who refuses to have a position on companies I cover kinda sucks. In the last year, we've seen many companies in the sector collect huge seed funding rounds, progress through A and B series funding, and of course execute some pretty impressive crowdfunding rounds as they strive to bring their vision of a cleaner, greener, safer, and smarter transportation world to market. And as an example, Atlas Motors, which just published a video of its first functional alpha prototype of its promised XT pickup, managed to crowdfund more than $2 million in the last day alone. That is not chump change found under the back of the couch next to a couple of old toffee wrappers and your dog's lost Kong. After the various funding rounds have been completed for any startup, the next place to look for funding is of course the stock market. Traditionally, companies entered onto the stock market through an initial public offering, or IPO. It's a lengthy process in which the company and its books are placed under quite a lot of significant scrutiny. The company's valuation is vetted, its earnings are examined, and if everything goes well, the company is listed and can gain access to the technically almost inexhaustible funds that come with being a publicly traded company. This usually means the company has to have some significant milestones or achievements to its name. A bulging order book isn't acceptable, and neither is just a spec sheet. As 2020 and 2021 has shown us, for those companies who don't yet satisfy the requirements to go public via an honest-to-goodness IPO, there's always a reverse merger with a special purpose acquisition company, or SPAC. Because these make use of already listed shell companies that have previously satisfied those requirements of an IPO, the companies being merged are subject to a lot less scrutiny, and as I've already explained, investors are so desperate to become the next Tesla investor that, well, money flows freely, even though there is significantly higher risk for those investors looking at investing in a company that's entered the market via a SPAC. So far, the number of companies that have gone public through a SPAC is exhaustive and long, and the number of companies that have gone public through an IPO is small and very exclusive. Right now, there are only 2 plug-in vehicle companies that I can think of that are on that latter list, Tesla and Arcimoto. But now there is a third vehicle company to add, Rivian. Late last week, the adventure vehicle specialist announced its intent to go public through a good old-fashioned IPO. So today I'm here to tell you about what you need to know about the announcement, try to delve into what's likely going to happen next, and explain why Rivian's announcement does have some investors already nervous. First, those facts. At the very tail end of last week, Rivian said that it had filed paperwork with the US Securities and Exchanges Commission, or SEC, to prepare itself for an IPO. The paperwork was submitted as a confidential filing, which means right now the specifics of what's in that paperwork are not publicly known, although rumours are that the date for Rivian's initial public offering is expected to be set for some time around the US Thanksgiving, which is late November for those outside of the US. This, so far, is not that unusual. But in case you're not sure of what a confidential IPO is, let's take a slight detour to explain it, because it's important. While traditional old-school IPOs allowed a lot of the IPO paperwork to be visible to investors fairly soon after the IPO was announced, the US government created the confidential IPO process back in 2012 as part of the Jumpstart Our Business Startup, or JOBS Act. The original goal of the act, to allow smaller companies that had a revenue of no more than $1 billion to confidentially file an S-1 form with the SEC. That form started the IPO ball rolling and allowed the US SEC to begin examining the company's financials and prospectus behind the scenes. But the actual investor prospectus that includes the original filing, well, it only gets published 15 days in advance of a confidential IPO happening. Confidential IPO filings allow the company that's seeking an IPO to keep a lot more of the information about its finances and prospectus confidential for a lot longer. It means that a rival firm can't suddenly find out a lot of confidential extra information. Moreover, confidential IPO filings don't always lead to an IPO. The company seeking out a confidential IPO can pull out at any point, and additionally, it doesn't even have to set a date in stone for the IPO. This gives companies much more flexibility and also ensures that they aren't hauled over the coals prematurely. Furthermore, if the SEC notices something that's erroneous or in need of extra attention prior to that IPO, that can all be done away from the public scrutiny, saving face and frankly making the IPO a lot neater for the company seeking to go public. But carrying out an IPO like this can cost the company more money than a traditional IPO, since there's often more legal and accounting costs involved, especially if the IPO offering keeps getting its date shuffled around. And while traditional IPOs are a great way for a company to attract attention ahead of the offering, sparking interest and often ensuring the stock flies on the first day, a confidential IPO can also create some hesitancy with investors. Many of the startups today that go the IPO route take advantage of a confidential IPO though, so what Rivian is looking to execute isn't a warning bell. In fact, while Tesla went through a public IPO where everything was pretty much public from the get-go in terms of paperwork in 2011, Arcimoto's IPO was a confidential one. As I now hope you're aware, this all means that Rivian's IPO date isn't yet set, and things might change quite dramatically between now and the actual IPO taking place, assuming it goes ahead, which frankly I have no doubt it will. When examining an IPO, investors want to see the potential for growth within a company, as well as pay attention to who has previously invested in it and for how much. With deliveries of the R1T and R1S due to start in a few weeks' time, Rivian will of course start to bring in revenue from its first private vehicles, and that of course will no doubt keep investors happy. But let's not forget that while Rivian may not have delivered any of its R1T or R1S at the time of filming this, it has already delivered a substantial number of custom-made, all-electric, internet-connected delivery trucks to Amazon, a company that is not only its first official corporate customer, but also a massive investor in Rivian. By next year, Rivian says it will have already delivered 10,000 Amazon delivery vehicles to the company. Which brings me to something that investors will definitely be paying a lot of attention to: how much money the company has raised so far through private investment rounds. To date, Rivian has raised more than $10.5 billion, certainly more than enough to bring its R1T and R1S to production, as it's already demonstrated. And those investors? T. Rowe Price Associates Inc., who actually invested early in Tesla way back when, Amazon's Climate Pledge Fund, Couture, D1 Capital Partners, Ford, Dragoneer Investment Group, Third Point, and Fidelity Management and Research, to name a few. The fact that so many well-known investment firms and asset management companies are plowing money into Rivian is great news for any prospective investor, and I'm sure it's helping to drive enthusiasm and demand long before we even know when the IPO date is officially set. But there's also one red herring that's causing some concern to investors: the company's valuation, which Rivian has supposedly put somewhere between 70 billion and 80 billion US dollars. Or if you prefer, up to 350 times the $235 million valuation that Tesla had when it went public back in 2011. Interestingly too, just last month when Rivian closed on a $2.5 billion funding round, confidential sources told TechCrunch that the company's valuation sat at around 27.6 billion US dollars. That's far different to the $50 billion IPO that Rivian was rumoured to be looking at earlier this year, and a whole lot less than the maximum $80 billion IPO now rumoured to be the valuation on the filings. Nearly 3 times the amount of money Rivian has earned so far through private investment. All of those disparate figures are enough to make potential investors a little wary, just on the face of it, but don't laugh off Rivian's accounting quite so quickly. That valuation is likely built on expected revenue for 2025. And as Reuters has astutely noted, Rivian's valuation, if you assume its R1T and R1S will sell for an average of $75,000 each, and you take into account that Rivian's current production factory has a production capacity of 300,000 vehicles per year, and Rivian's already confirmed to be looking for a second factory site, this all might not be so pie in the sky. That said, the stars would most definitely have to align, and Rivian would have to avoid absolutely all of Tesla's original teething problems with the Tesla Roadster and Tesla Model S in order to hit that valuation in that timeline. But Tesla didn't have anywhere near the competition that Rivian faces, thanks to promised electric pickup trucks from Ford, General Motors, Stellantis, Tesla, and if they make it to market, Lordstown and Atlas. And no, I'm not going to add Alfa to that list right now because, to my knowledge, Alfa doesn't have any working prototype of any sort. Although, the faces of the company apparently know how to make a mean coffee. But that is for another video. Given everything I've heard so far from folks who have had a chance to experience the R1T, it is a great vehicle, and hopefully we will see more media and social reports on it very soon. And let's not forget, unlike most startups, Rivian has already proven its R1T thoroughly capable by sending 2 early alpha prototypes on an epic journey from the tip of South America to Los Angeles as support vehicles for the long way up. I cannot think of any other automaker that did that ahead of an actual vehicle launch. It showed the R1T as a competent and capable vehicle, and I think this will give Rivian a massive leg up amongst prospective investors. So is this a company worth investing in? Well, I can't answer that because I'm not an investment expert, and disclaimer, you're going to want to talk to one of those before you put any money into any investment, not some random YouTuber. But as an automotive journalist, well, Rivian certainly seems to have all of its metaphorical ducks in a row. It's got a vehicle about to launch, it seems to have its production lines already dialed in, and unlike a lot of SPAC-tastic firms who have traditionally used reversed mergers to get money to stay afloat or fund development long before actual vehicles are ready for customers, I honestly think Rivian doesn't need the money to survive, but rather to grow. And that, frankly, feels like a really good vibe that many investors will really like. And that's it for today. If you like the video, be sure to give it a thumbs up and don't forget to subscribe to this channel and our 2 other channels as well, Transport Evolved Take 2 and Transport Evolved Shorts. I know a lot of you are already subscribed, but many of you aren't, so hit the subscribe button and make sure you hit the bell as well so you don't miss out on our next episode. Let us know below what you thought of this video, and of course you can always take it to the Discord chat room if you don't like the comment section. Who does? And then it is absolutely free to join. Discord is very good fun. We'll make sure that we leave the link below. Thanks on behalf of the entire Teehee crew go out to the folks on my right for being our $15 to $49 a month patrons. Special thanks to our $50 a month patrons. They are David Janakula, Andrew Martin, Greeda Drahoa, Brophy Wolf, Tesla in the Gong, Paul Conway, Sean Ueda, Gordon C, Regine Fellows, Anonymous Freak, Jim Burness, Carl Hodgson, Anthony Coates, Laura Sanborn, Rory Litwin and Denny Hyde. And our deepest gratitude to our $100 a month Patreon supporters. They are John Lyons, Marcel Ward, Reggie Watts, JP Fagerbeck, Will Graylin, Ellery Hennesley and Ian. If you'd like to join the ranks of wonderful supporters, you'll find links below to Patreon, Bitcoin and Ko-fi. And of course, you can buy your very own TE swag like my t-shirt at the Redbubble store. Thanks for joining me, and as always, keep evolving!